I think that Bitcoin now is traded like any other macro asset. $2 trillion, it's big enough. It's not like it in its own little bubble in its own cycle now, and we are orbiting macro. So if that turns, Bitcoin will turn as well. And of course, when macro goes up or down, Bitcoin's, very accelerated. It's like that on steroids. So, but long term over the next 4-8 years, of course, it's going to continue to outperform every single asset class on the planet.
The current Bitcoin cycle, according to Willy Woo, is a special transitional stage that combines aspects of early-stage bullish momentum with reaccumulation. He makes analogies to Bitcoin's previous consolidation phases, emphasizing how previous cycles had extended price stabilization followed by strong rises. However, institutional demand, especially from spot Bitcoin ETFs, and continuous strategic accumulation from big players like MicroStrategy have driven a structural shift in the market today. Furthermore, on-chain measurements show improving fundamentals, with long-term holders continuing to take in supply at a pace similar to that of previous bull runs' pre-breakout stages. A more favorable climate is also being created by regulatory changes, including as growing political support for Bitcoin and maybe a softer posture from important financial regulators. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
Our bull market. And the interesting thing about this cycle right now is, of course, spot is back in, right? We've had the ETFs come in finally, and that has allowed the institutional type and also high net worth types to buy the ETF through traditional, TradFi exchanges. And so where previously, if you wanted exposure to Bitcoin, there was no real, you had to do offshore exchanges, really sort of grey water, sort of regulated markets. It's sort of regulated, but now you've got, so you could only get long exposure through the CME. Now with the spot, that's brought a lot of spot dominance back into the game, and that's much more bullish for Bitcoin. If you think about bets on Bitcoin, that's effectively debasing the currency, right? Because if I am wanting to buy Bitcoin and I have to buy spot like before futures, then someone very, very rare in the world who has Bitcoin has to sell it to me, and they've got to be convinced to sell it to me. But with the invention of futures, someone can say, I'll take that bet with you, and they can sell me that exposure. So that's quite a bearish pressure. It's a debasement on the 21 million finite supply. And so with spot dominance, it's much more bullish. And, so far this cycle has been, I still consider we're in a reaccumulation cycle. People think we're bullish, but actually underlying it in the phase we're in, it's kind of that. If you remember, we chopped around for a long, long time around 10,000 in the last cycle before things went ballistic. We're in that phase of the market, but it's skewed bullish because of the ETF and MicroStrategy. So that's where we are now. And of course, a lot of the regulatory risk around the SEC is evaporated effectively this week with Gensler leaving office. And of course, we've got our first president that's about to be inaugurated effectively today. That is pro Bitcoin and crypto, but Bitcoin, that's important. So yeah, and a lot of talk around the strategic reserve. What I'm saying is fiat money is going to die because we know that from every civilization, never survived. I'm saying that we need to get onto a commodity money, and gold and silver is not a possibility given the technology landscape. So therefore, the only way we can secure money is with energy. And we've got Bitcoin, and it's got there's no second best. It's got 15 plus 16 years of head start of adoption. There's not even a single competitor. Like, what's the next one? It's not Ethereum, that's proof of stake. And it's not geopolitically decentralized. It's not secured by energy. It's secured by like fiat. It's social consensus. Everyone agrees that this thing has value. So the next one is Litecoin, I think. Right. So we've only got Bitcoin. So if you look at if it's going to be the money for the entire economy, then all the money in the system equals world GDP and roughly all the value of the publicly listed companies. 100 trillion, 100 trillion, 100 trillion. They've always been relatively in check because you need this amount of money for this amount of trade and this amount of producing businesses. So that today is roughly 100 trillion, and that gives you the 5 cents. So it'll get there, and don't worry about how it's going to get there. But if you look at when it'll get there, you just trace the adoption curve of Bitcoin till it reaches near saturation, and maybe that's 15 years or something like that. That's it. And how it will fail is if Bitcoin fails.
According to Willy Woo, adoption by both corporate treasuries and sovereign states will propel a slow transition toward a financial system based on Bitcoin. Other nations are now considering Bitcoin as a strategic reserve asset, thanks to early adopters like El Salvador. As more organizations and governments acknowledge Bitcoin's long-term worth, this tendency is quickening. Woo claims that the acceptance of Bitcoin is progressing according to a predictable curve and could take up to 15 years to reach full saturation. He anticipates that Bitcoin's market capitalization will rise sharply during this time, eventually approaching the $100 trillion total worth of the world's GDP and publicly traded corporations. Please remember to like this video, subscribe to our channel, and enable post notifications if you have a strong interest in learning about the future of finance and the function of digital assets like Bitcoin. This will ensure that you never miss anything. Thank you, and enjoy the video.
I actually think it's going to be a race of sovereigns now. The corporate treasury got started in the last cycle of MicroStrategy, and that's starting to get, in this cycle, it's getting momentum. I think in the last cycle, very, very early, El Salvador and a few others that were quietly stacking. I think this cycle, that starts to come out, and the cycle's ahead, and so everything becomes a race. And I don't know if there's a big unlock. I think it's one step after the next and the next and the next. BlackRock was the big one in this cycle. To get the blessing of Larry Fink. What is it, 10 trillion BlackRock manages, something like that. You're not going to get fired to recommend Bitcoin. Asset managers would buy it themselves and not recommend it because it was risky for their career. Now I see, CIOs of banks not only talking about Bitcoin as an investment, but they're talking about it as the next world reserve currency, which is crazy. You didn't see that last cycle. So it's safe to talk about it and recommend. So it was an interesting cycle, the last cycle. We had a lot of uptake on the futures exchanges. Obviously, the CME came in on the tail end of 2017, and over that time, we had a development in the futures market, effectively trading paper bets on Bitcoin. And the last cycle was very dominated by paper, and so this is the thing, is that when I do my work, which is looking at what's happening with the transactions on the blockchain, where you can kind of get a good read of what's happening with investors with spot, you don't get the full picture of what's happening on the derivative side of things. And whilst there was a lot of buying on the underlying spot Bitcoin, there was a lot of bets coming in on the tail end of the bull market. I think we touched 70,000 for a second time. And then the amount of paper bets on Bitcoins went through the roof. So you don't, in that phase of the market, you don't actually need to sell your Bitcoins, right? If you want to exit, if you're like an investor, a sophisticated investor, you wouldn't sell your Bitcoins. You would just hedge them out and sell shorts on your Bitcoins. And it turned out that you would collect something around 20% annualized yield by netting out to cash. And that's actually what happened. And that tipped the market. And then, of course, the weakness in the underlying crypto side of things, like Lunaterra blowing up, and then a cascade of liquidations and like earn products blowing up, and eventually FTX blowing up. We had a very, very pronounced bear market as a lot of coins got dumped. And so it turned out the bottom of the bear market of 2022 was just after the FTX collapse, and that was when all the paper evaporated. They stopped their shorts. And a lot of Bitcoins got scooped up off of exchanges. Some of that was probably custody risk, but I think a lot of it was bought up. And that marked effectively the start of January 2023.
In his reflection on the past Bitcoin cycle, Willy Woo highlights how the expansion of Bitcoin futures and derivative markets had a significant impact on the 2017 bull run. There was a spike in paper Bitcoin trading after the CME Futures Exchange entered the market at the end of 2017, which had a big effect on the dynamics of the market. A large portion of the price movement was driven by derivative trading, even while the spot market, the actual buying and selling of Bitcoin, showed robust demand. In order to profit from annualized rates without having to touch their actual holdings, many investors, for instance, hedged their positions via short sells and derivative contracts during the 2021 bull run rather than selling their actual Bitcoin. Due to the intricate relationship between the paper and spot markets, the price of Bitcoin surged to $70,000. But this was followed by a series of liquidations that were exacerbated by the failure of important projects like Luna and other cryptocurrency products. The speculative paper Bitcoin positions unwound, causing enormous sell-offs during the bear market of 2022. After many of the leveraged holdings vanished following the FTX collapse, Woo thinks the market bottomed out. The 2023 bull market then started as investors' confidence returned and Bitcoin started to be snatched up from exchanges. Willy Woo's observations emphasize how crucial it is to comprehend how the spot and derivative markets interact. Even if Bitcoin's fundamentals are still sound, outside variables like leverage, speculative wagers, and market liquidations have the power to significantly alter the market. And as always, happy investing.